Good morning, traders. It's 8:01 a.m. Chicago time on Thursday, the 14th of October, 2021. This is episode number 2094. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Thanks for the sound check. So, where are we now? The market posture this morning is risk on as the S&P is up 94 basis points or 41 points. The Dow's up 287 points or 83 basis points, 156 and a quarter points on the Nasdaq, up 105 basis points. The Russell's also strong, up almost 24 points or 106 basis points, 108 really. The Euro Stoxx 50 and the DAX, same story. Really, allocation is to risk to equities today. At the same time, however, we're seeing crude continuing to pressure and press higher. Crude yesterday had a bit of a sideways day with some selling and ended up recovering after the open of the session. Crude gets its EIA inventory report today. Overall, also we saw gold climb yesterday after dipping down. It climbed pretty strong. It dipped below 1760 and came right back to the 1796 area. And is holding steady in here at 1799.60, up 27 basis points. So overall, quite bullish across the board. We're seeing the 10 years also pushing up along with the 30 years, which did so yesterday as well after the inflation numbers. And that's where we are. What's pushing the market around? Really, we've been in a consolidation pattern for quite some time. And we finally broke out last night. Broke above the 65 in the S&P, which was a quad top intraday. If you look at the hourly, you could see it kind of testing and retesting that level and pushing it. And it finally broke out, and then the key areas above were 75, 83, 92, 400, 4400, and 4406. It took all of those. We'll review that in a bit. It took all of those, has not reached a 4406 yet. So what's pushing things around? It's looking like earnings have been pretty strong this morning. We had a slew of them. Citigroup came in and beat by 28%. Morgan Stanley came in and beat by 21%. Walgreens Boots Alliance, which is a very large pharmacy company, beat by almost 15%. Wells Fargo beat by 18%. Bank of America beat by 20%. US Bancorp beat by 12%. And then we're looking at Taiwan Semiconductor, major player in that sector, beating by 3% despite 3.8% despite the issues we've had with the supply chain. United Health Group came in and beat by 2.49%. We're waiting for Alcoa after the close, so you can see right there that for Q3 the numbers have been stellar. There has not been all that much guidance to the downside. So the market is feeling pretty good about what's going on here. The other thing is, of course, the taper chatter is, we know the Fed is tapering, and how much, how far are they going to go too far? Blah blah blah. There's a lot of chatter there about that. As far as the S&P is concerned, we're in a trending market condition. The auction is in a trending condition. It is one time framing up. We've had 210,000 contracts traded so far in this session, with 100% of the inventory long, 100% long, 100% long, 45 points of range so far. And with a high of 43.99, the point of control has shifted to 43.95. I need to correct that in our levels. 43.95, save and upload to server. There we go for our convergent folks. And then the low is 43.54. So we settled yesterday at around 43.55. 55. So we took out the settlement by a point and ran the other way. This is why the inventory is 100% long, as you see here. So that's where we stand. Here's what we expected yesterday. I try to visualize a path that the market's likely to take. It's not, don't give that too much attention. It's simply a plan. Remember, the goal, as I talked about in the focal point that I posted on Twitter, the goal is not to predict things and be correct, although it seems like that's the intent, right? When you look at a bunch of quote unquote gurus or the guys on CNBC or whatever, it seems like their goal is to be right. That's not our goal. That's misleading. It's not our goal. That is a futile pursuit, in my opinion, when it comes to trading. The goal is to have a plan, and the plan's goal is simply there to help you be ready to respond. So what's important is you create a map. You create a map of what the key response or reaction areas are going to be, and these numbers sound familiar. And then that way you can respond. But to visualize helps at least me, and I've been doing this a long time, this process. It helps me see the trade before it happens, or visualize it before it happens, much like athletes do before their event or before a boxing fight or whatever. So yesterday, the primary scenario was for a pullback to 41.42, push into 60, pull back a little bit, and then I was looking for a battle at 65 and a break to 75 to come off. That did not happen. Scenario one did not happen. The secondary scenario is a push towards 60, consolidate, and then push down, and I talked about it going as far down as 19, 17, 15. That area there, that zone there, we have a single print at 1975. So I was looking for a test of 19 and a pop higher. Here's what it actually did in yesterday's action in our review segment. Here's where it is. Pretty good rotations yesterday. We push immediately up to 57. We sell off, consolidate, create a nice little zipper, and you got to keep an eye on the zipper for later. Break through to the downside, and then we get down into this weak low from the prior session on the close. We had this multi-week low before we popped up. We get down to this weak low, we create another zipper, and then we finally extend out to where? The 19. So we went from 57. Remember, the path for scenario 2 is 60 to 19. If you recall from the prior screen, I'm not going to pull it back up, 60 to 19, and then there are some key areas in between that we need to pay attention to. Really sweet test of the mid here for a nice little pullback, and then we finally break higher on what was the largest impulse of the day, and it set up a 40 even long, which I narrated on Convergent Trading and the Head Trader channel. Set up for 40 long, and the 40 long would target 65 above. That's what we're looking for. Remember, the 65 is now was at this point a triple top, which to many people and many books and many traditionally, a triple top is really strong resistance, but in auction theory, a triple top is a weak high. It's actually the opposite. It's viewed as the opposite, and that's what makes a market: two opposing views taking positions. And so every time we come back to the 65, we're looking for that to break, because a market that has found an excess at 65 is considered not to come back. There's no reason for it to come back unless it wants to test above or retest it. So the goal is to trade the 40 on the pullback to 65. Took a long time, had to cut that trade early for a meeting. Unfortunately, I wish I could get those 40s back, but it pushes to 64.75. So what we have here is scenario two complete, and then we're starting to work on scenario one after that. My computer's laggy this morning, but really what it did is it pulled back and it just consolidated with this odd ass ledge at 43.55. That right there, ladies and gentlemen, is a very bizarre looking profile. Very bizarre looking profile. It looks like it has an excess above the IB at 57 or higher. So 57 to 65 looks like an excess with a weird ledge at 55, and really no value throughout the day. This was a complete price discovery type profile, but it still fits the description of what is called a normal variation day. And so a normal variation day tells us the market has traded quite normally, and but has extended the IB in one direction and is in the process of price discovery. Overnight, we come in and we see that we're hanging out at this 57 area, 55 area. That weird ledge I talked about is essentially the point where the market launches from. We break the 65 with some stops. We saw some spurts there. And it breaks the 65 and pushes through to about 67 and grinds its way to 71.50. I watched this last night as it was happening, and pulls back to VWAP, and then from there it is tapping on VWAP, and now it has accelerated away from VWAP. There's a separation there. This is technically a trend up. We have a P-shaped profile. There is a short squeeze. I tweeted about it last night. There's a short squeeze in progress with a lot of size, but trading up near the highs. This is coiling for probably a continuation. Again, I was looking for 44.06 before the open today, but didn't quite get there. So this is why the 100% of the overnight inventory is above settlement or is considered long, and that's where we are. Okay, looking at how things are shaping up, really, don't forget, even though you're a day trader, man, why is it doing this? 1 second. It's loves to mess with these settings. Laptops just don't work very well for trading, I have to be honest, no matter how powerful they are. They just don't operate the same way as a PC. But don't forget, as a day trader, to keep an eye on your fundamental products. You know, there are key products that are speaking, that impact inflation. You got your crude, you got your gold, you got your silver, bonds, notes, and then the major currency pairs. And what I like to do is not only look at the one-time framing, not only look at what the one-time framing. This is a 4-hour chart, all sessions. I'm comparing it to where we started the month. Why the month? You know, it's an arbitrary point, really. You can anchor these VWAPs, like Brian Shannon talks about a lot, to alpha trends. But really, I'm just looking at how is the market responding to the most recent VWAP. Don't really care what that VWAP is, because if it's trending, it's going to leave whatever VWAP you put on it behind, like it did in the overnight session. So you can see that we're breaking away from this balance here very clearly. In the Nasdaq's been quite bearish, and it's breaking to the upside. not the NASDAQ, I mean the Dow. The same thing in the NASDAQ, very much consolidated at the low and breaking to the upside. Crude has been really accelerating to the upside. That's got an inflationary push to it and is likely to cause a drag on earnings. Crude gets to a point where it starts to actually directly or inversely correlate with equities. Gold has been very strong, breaking away. Look at the separation here. Same with silver. And then we have the notes coming back. The notes coming back to their monthly VWAP, but the bonds breaking higher. So the notes are accelerating a little more than the bonds this morning. So just keep an eye on the big picture, just so that you're not too entrenched in your day-to-day, just so you can see, not telling you to become a macro analyst, but just keep an eye on the bigger picture to see how things are being moved. Don't forget that today's webinar, I'm doing a live cast at 4:30 today. I'd love for you to register. You can go to ft71.com/select-data. We'll be taught, we're going to be looking through and sifting through all the noise that's created by the various data feeds and platforms and things like that to help traders figure out what data they need to keep their costs as low as possible and get high quality data. So we're going to cover that, the different types of data, market feeds, market fees, who's professional, who's non-professional, so on and so forth. We'll be covering that today. Let's take a look at what's expected for the session and let you guys go about your preparation into the close. Please take a moment to register. The link is also pinned in the YouTube live chat. It's in the description of the video here, and it's also on my Twitter feed. What are we looking at for a primary scenario? So let's put up the map. Okay. Next major area up is right up here. We have this top in the 25 zone. So this 23-25 zone is the next key resistance. We are just coming into the gap from the 28th of September, which we filled partially on this day here, but didn't quite complete. So there's an area there that remains unchecked. The 0608 low volume node, that was my target for the overnight session, couldn't quite get there, could not break the 4400. And then you have the 00 here. And then below us, well, guess what? Below us we have the 65 triple top now having been broken, and we're opening above it, the 65 triple top, and then we're looking at the 55 ledge, and then beneath there it's 40.39, and then we're back to 19 through 15. My computer cannot keep up with me drawing, and so the numbers are coming out all weird. Sorry about that. So this is the map. This morning, overnight inventory, we're opening at an open auction. Looking for responsive selling. We have 100% inventory this morning. Looking for some responsive selling. I expect the gap to remain open. I expect the gap between yesterday's high and today's low to remain open. I expect somewhat of a pullback, and then I'm looking for it to break 4400, pull back to the 4400, push the 0608, and then ultimately get to the 2325 as a minimum. So this pullback is likely to be into the 92 area, this pullback here, 92 MC point of control. And if we go 92 to 23, that range isn't very high. Isn't as high as the recent statistics will show, which is around 40 points, but gets close enough. So this is my primary scenario, small pullback and then power through. The secondary scenario however, is responsive. And the reason the secondary scenario is expected to be responsive is this thing really moved on thin air. We have 200,000 contracts that have traded. I'm going to draw the second scenario out here. Second scenario, push the overnight high, pop through the 4,400, get to that 80608, and then become responsive down into 92, into 83. 83 is another chop area, potential chop area, the settlement from last week, and then start to work itself towards that 65 poke to 55 and bounce back up. So this gives us about 45 points of range, which is more in line with the recent, 82. More in line with the recent ranges that we've had. That's the plan for today, and these are the key levels. Pay attention to the levels outlined here. This is the key map of the day. Good luck, and don't forget to register for today's webinar. Take care.